Now speaking, Hayden Blair, Senior Director, Investor Relations and Treasury. SFIX reported results for its third quarter of fiscal year 2023. Interim CEO Katrina Lake and CFO David Aufderhaar discussed the company's financial performance in a webcast conference call. Revenue was up year-over-year, with total sales of $1.3 billion, an increase of 22% compared to Q3 2022. Gross margin increased 590 basis points to 58.4%, while adjusted EBITDA rose 44% year-over-year to $81 million. The company also reported strong growth in active clients, up 34% year-over-year to 4.6 million. SFIX also announced that it expects to raise its fiscal year 2023 revenue guidance to a range of $1.53 to $1.56 billion, representing a 15% to 17% increase over fiscal year 2022. Now speaking, Katrina Lake, Interim Chief Executive Officer. Interim CEO Hayden discussed the company's strategy for repositioning and refocusing during a challenging macroeconomic climate. Top priorities are preserving profitability and cash flow, while actively managing inventory levels and tightening credit standards on vendors and manufacturers. The company is also investing in personalization and AI to maximize long-term potential. Q3 included a strategic review of operations with an eye on efficiency and effectiveness, leading to a 3-node network strategy that optimizes inventory and allows for better client experience. This strategy will close 2 additional fulfillment centers in Bethlehem, Pennsylvania, and Dallas, Texas, resulting in $15 million in annualized cost savings. Additionally, continued economic conditions in both the US and UK have led to exploring exiting the UK market in FY24 due to lack of profitability. To further differentiate the customer experience, the company has increased their utilization of AI, including outfit generation, personalized style recommendations, product descriptions, and inventory buying tools. Early testing of this approach compared against existing buying tools has shown a 10% lift in keep rate and AOV, leading to 20% of all POs created being algorithmically informed by end of Q1. Overall, these decisions are providing clarity to the company's trajectory and setting them up for healthy growth in the future. Now speaking, David Aufderhaar, Incoming Chief Financial Officer. In Q3, revenue was $395 million, down 20% year-over-year and 4% sequentially. Net active clients declined 11% year-over-year and 3% sequentially to approximately 3.5 million. Average order value remained relatively steady year-over-year. Gross margins expanded 150 basis points quarter-over-quarter to 42.5%. Inventory levels decreased 5% quarter-over-quarter and 29% year-over-year. Advertising was 7% of revenue in Q3, up slightly due to seasonality and increased focus on brand awareness. Adjusted EBITDA came in ahead of expectations at $10.1 million, and the company generated positive cash flow of $21.9 million. For Q4, the company expects revenues to be between $365 million and $375 million and adjusted EBITDA to be between $0 million and $10 million. The company is focused on profitability in the short term while making tough decisions now to ensure resilience in a wide range of possible macroeconomic scenarios. It has implemented $135 million in cost savings initiatives in FY23 and proposed an additional $50 million in annualized expense savings. Truist Securities analyst Yusuf Squali inquired, "What is the size of the addressable market now with your new strategy, and how do you anticipate AI will impact your business in the future?" Katrina Lake replied, "I'm excited and optimistic about our long-term strategy of focusing on our core differentiators to provide a unique experience that combines the best of algorithms with human stylists. We believe we have competitive differentiation that will push us in terms of our addressable market. We are investing in AI capabilities to increase value for our current clients as well as a broader universe of potential clients." BMO Capital Markets analyst Simeon Siegel inquired, "Can you quantify the UK impact on the P&L from last year? Additionally, how many active clients are there and what are the estimated P&L impacts of closing 2 distribution centers?" David Aufderhaar replied, "Regarding the UK, we are still in the proposal stage and no decision has been made. However, if it goes forward, the expected annual impact would be $50 million in revenue and a negative $15 million EBITDA, resulting in $35 million in SG&A expense. Regarding distribution centers, if this moves forward, the estimated annual savings would be between $10 to $15 million, but we are phasing the closings to ensure our clients are not impacted." BMO Capital Markets analyst Simeon Siegel inquired, "Kat, could you provide any insights on the impact of the promotional environment on sales?" Katrina Lake replied, "Simeon's question is a great one. Our pricing strategy is designed to provide customers with a wide range from low-priced items in the $20s to higher-priced items over $100. We are monitoring macroeconomic conditions, particularly when it comes to customer acquisition, but have seen strength in average order value, AOV. It is our goal to meet the customer where they are, and we haven't seen any significant trade down yet. However, we are keeping an eye on this. Roth MKM analyst David Bellinger inquired, can you quantify how much improved access to inventory for your stylists has been from Q2 to Q3, and how much more work needs to be done to open it up further? Katrina Lake replied, thanks, David. To clarify, are you referring to the network aspect of our company? Katrina Lake replied, yes, that makes perfect sense. To ensure we have the right inventory in the right place to meet our clients' needs, we have consolidated our warehouses down to 3 nodes. This will help us to provide a more personalized experience for our customers and a more efficient service for our stylists. Roth MKM analyst David Bellinger inquired, could you speak to the April trends you saw as you exited the quarter, and clarify the Q4 guidance in terms of deceleration and quarter-to-date revenue growth? David Ofterhar replied, David, April saw macro headwinds in our volume relative to February and March. This is consistent with what we heard from other peers in the industry. These headwinds are reflected in our Q4 guidance. Barclays analyst Trevor Young inquired, can you provide us with an update on the reduced DC footprint and how that will affect inventory levels into next year? Additionally, what did you mean when you mentioned maintaining similar levels of advertising spend in Q4, as a percentage of revenue or in absolute dollars? Katrina Lake replied, thank you, Trevor. David, I'm confident that our team can handle both questions. We have the expertise and knowledge necessary to provide accurate answers to your inquiries. David Ofterhar replied, we anticipate our advertising spend to be similar to the 7% of revenue we saw this quarter. Our teams have done a great job focusing on composition and core experience, which has enabled us to reduce our inventory in Q4. Additionally, reducing the number of warehouses could lead to fewer inventory turns over time. Wedbush Securities analyst Tom Nikich inquired, what steps are being taken to increase the customer count and top-line growth in the upcoming year? Katrina Lake replied, thanks for the question, Tom. We understand that cash flow and profitability are key to long-term growth. We're carefully managing our marketing spend to be efficient and prepare for different macroeconomic outcomes. While April was more challenging, we remain profitable at lower revenue levels. Our strategy is focused on stabilizing the business, investing in our core and platform, so we can be ready for future growth. We don't yet have an estimate of when that inflection point will occur, but we believe we are taking the right steps to set ourselves up for success. Telsey Advisory Group analyst Dana Telsey inquired, Kat, what trends have you seen in the categories Stitch Fix offers? Is there a need to restructure them due to the fewer distribution centers? How has the subscription model impacted keep rates and customer experience? Katrina Lake replied, in terms of assortment, we're seeing success across the board, particularly in dressier options like fitted dresses and workwear for women. The consolidation of our warehouses allows us to have better access to a greater variety of inventory, which could help drive wallet share and increase client satisfaction. We are also leveraging algorithms in our buying process, which is already showing positive results for AOV and customer experience, and we are excited about scaling this capability further. Jefferies analyst Ashley Helgens inquired, could you provide an update on how the targeted marketing to reactivate clients is progressing? David Ofterhar replied, in response to the question asked, active client numbers were down 3% quarter over quarter. We saw higher gross adds this quarter due to increased acquisition spend and strong re-engagement, of 34% kick and 24% YI. We anticipate active clients to remain negative in Q4, as we are still lapping the high dormancy resulting from marketing spends of over $50 million each quarter in Q3 and Q4 last year. Piper Sandler analyst Ed Yruma inquired, can you drive client growth in the medium term even if macro conditions remain challenging? Katrina Lake replied, thanks, Ed. There is no question that macroeconomic factors can have an effect on our business. However, it would be a waste of time to quantify the impact, as it's hard to predict what will happen over the next 12 to 24 months. Instead, we are focusing our energy on creating a more compelling value proposition for a broad range of people, while also being prepared to take advantage of potential macroeconomic opportunities. David Ofterhar replied, Ed, this quarter our SBC decreased 12% from last quarter and 28% year over year. We believe the current level is appropriate for the near term. Going forward, we aim to leverage this fixed cost structure. Morgan Stanley analyst Lauren Schenk inquired, can you provide additional insight into your plan to invest in AI and how do you see it affecting the competitive landscape in the coming months and years? Katrina Lake replied, thanks, Lauren. We've been incorporating AI into our business since day one and have developed a competitive edge in this space. Our strategic plan for next year includes an AI roadmap that allows us to take advantage of off-the-shelf advancements and develop proprietary capabilities. We're using individual level data to buy in aggregate and are rolling out algorithmic buying for better experiences and improved bottom-line results. AllianceBernstein analyst Anisha Sherman inquired, what is different about customer behavior that is causing total revenues to be lower than pre-COVID levels, despite having the same 3.5 million active customers? Katrina Lake replied, at a high level, our freestyle-first clients weren't engaging and spending as much as our traditional clients. We weren't collecting enough data about them to create a compelling experience and retain their loyalty. Now, we are gathering their preferences and style choices and leveraging algorithmic buying to deliver an improved customer experience. This is a paradigm shift from 2019 and will enable us to bring in more engaged clients. David Ofterhar replied, our clients have an expected life cycle that comes with their tenure. We've seen a mix of activity levels from our clients, which is typical in the early stages of their relationship with us, before stabilizing. AllianceBernstein analyst Anisha Sherman inquired, is churn driving the volume declines, and if so, to what extent? AllianceBernstein analyst Anisha Sherman inquired, are you seeing differences in churn levels between new and older cohorts? David Ofterhar replied, I believe the root cause of our reduced revenue is losing freestyle-first clients, as Kat mentioned. This is partially due to market forces, but also other factors. AllianceBernstein analyst Anisha Sherman inquired, could you explain the reasons behind this disparity in churn rates between the older and newer cohorts? David Ofterhar replied, we believe that that's where we're going to get the highest value in the long run. We're seeing higher churn rates among specific cohorts of our freestyle-first clients. For that reason, we've pulled back and are focusing more on our core users, as they offer the greatest value in the long run. Overall, macroeconomic pressures continue to affect all industries.